All right, and we're live. Tanner, you want to tell us about your sleep score?
Okay, well, he just saw some comment that said that I was late because I was improving my sleep score. Not true, but your boy sleeps in, so it was good. 91.
All right, we got Manuel here to talk to us about WIX. Manuel's you got 91. That's pretty good.
Yeah.
Manuel's last pick was sorry, I get distracted easily. His last pick on the stock tank was Nebius, and I think that was like at $25, Manuel.
I'm not sure, honestly.
It was in that range, like 25.
Quite lower than it is today.
Yeah. When we were talking about it, I think it had risen to the 30s at that point. And I swung traded. I was the only one in at the time, and I was like, I'm going to get more NVIDIA with this. It's a good play, but I need more of that. And of course, it's gone up a lot faster and higher than I expected. Not higher than Manuel expected. The man also called HIMS. He was a very early investor in HIMS. He also got out at a much higher level than where it's at right now. You're killing it, Manuel.
Yeah, dude, it was actually crazy because like he got into HIMS before we got into HIMS, like single digits, right? And then he got out at like $60, and then he just went all in with all of that money into Nebius at like 25. Just insane.
To be fair, my timing with him wasn't that good. Like I did my first trim at $60, but then I trimmed like all the way down, and the average was like 40, probably around that. I mean, it was still like 300% gains, and when I started that position, I made it like a 30%, 35% of my portfolio. So it was, I mean, it's not my biggest winner ever because of Nebius and Rocket Lab, but it's the biggest realized winner because I haven't sold Nebius or Rocket Lab. So things can always go wrong. At least HIMS is secured as a winner. And I mean, I got a lot of bad comments because of my timing, because like the week after I completely sold out of HIMS, they announced the partnership with Novo Nordisk, and the stock went up like 40% in a single day. And I was like, oh yeah, maybe I was wrong, because like the reason that made me sell was the fear of litigation coming from Novo Nordisk. And in the week after, they signed a partnership with Novo Nordisk, and I was like, okay, maybe I was wrong, but I didn't think I was wrong, because the partnership always sounded a bit sus, And I said that, and everyone was like, oh, you're biased, man. You sold, and now you're bearish. Everything they do, you're just bearish, man. So, I mean, thankfully or not thankfully, things gone on the path that I anticipated.
Yeah, I love that you always aren't afraid to hold an opinion that's different than what the market and many investors have, and make up your own mind. And you're willing to change your mind based on the facts too. And it's an awesome thing and a way approach that you have. And likewise with WIX, which we're going to talk about in just a second. I mean, it's gone down since your initial investment in called WIX, because everything in SaaS is just nosediving. Yeah. It's very interesting to me. It's probably, for me personally, one of the more interesting stock tank episodes that we've had. I like them all, but this looks pretty attractive, and I want to hear more. So
yeah, same here. Just from following a couple of your posts earlier on WIX, I can't wait to hear the full story. Maybe just before we jump into it, where does WIX sit in your portfolio? Like what percentage concentration when you first start getting in? Just give us the backstory of like your position.
Yeah, give me just 1 second, because I had some troubles with my presentation.
And then for the rest of you guys that are watching, I'm going to be bookmarking questions that we have throughout for WIX. And then we're going to be able to ask Manuel towards the end of the show. So ask your question. Don't double ask it. Just trust that I'll be able to bookmark it.
Can you throw up my comment, Tevis, just so people see where to follow him?
Yes. He is like... has way more followers than all three of us combined on X. I think people knew.
No, not combined, I guess.
No, combined. Maybe. No, combined.
It's comparable for sure.
and when we first started talking to you about HIMS, I mean, like there was like 1,000 people maybe following you, so 85,000 now, and there's a reason for it. So we were back in those days.
Kind, Roy. You're too kind. You spoiled me, man.
facts, though, and you're humble. So we love you. We can't wait to hear what you're saying about WIX.
Yeah,
So
you know what I've noticed about your style is, and you even see it in the tweets sometimes whenever you're looking for new companies to potentially invest in, is that you do not want to pick names that are the, you know, in the realm of FinTwit or however you want to call it, right? You want to try to find these companies that not many other people are paying attention to, which I think is even going to greatly impact how many views even this is going to get, because no one's talking about WIX right now. But clearly, if people aren't following your due diligence, you put a ton of work into this. And some of these names that people are not fully paying attention to is where you can find the most amount of alpha. And I've read a little bit of what you've read or written about WIX, and there's definitely an opportunity here. So yeah, just super excited about this. This over, you know, some of the other ones that are more hyped names that everyone already knows about.
Yeah, I mean, if you look at my portfolio, you can say that I only buy like Finex names, but I bought them before they were Finex names. So, I mean, I'm not going to sell a stock just because it's widely followed now. Like HIMS, I did sell it, but it wasn't just because it was widely mentioned. I mean, it's my thesis broke, so I sold it. Nebius, I would obviously not sell it just because it's now hyped, and now there's even kind of a cult like there was and there still is with HIMS. But I mean, a cult enough isn't a reason to break my thesis. Rocket Lab, the same. I mean, so just to my defense, if someone that doesn't know me goes to check my portfolio, he might claim, oh, this guy is just buying whatever like Finex is talking about. But I try not to do it. And that's why I looked at him at WIX, sorry.
Let's hope that there's a WIX cult talking about how you're chasing the hype whenever this company is at 10 or 12 billion dollars or something like this. Yeah. After you've purchased it all the way from here, but you know.
So just to start going to Tavi's question about my allocation and all that, I wanted to start just by sort of clarifying the differences between how I'm looking at WIX thesis now and how I was looking at Nebius when I pitched it to you guys. Because as you mentioned, I was here pitching Nebius. It turned out quite well. But there are a few differences. First, I'm not as deep into WIX as I was into Nebius. Like back then, Nebius was clearly my largest position, like my highest conviction holding. Maybe I could have done a better job outlining the thesis at the time. I was here with Sam as well, so it wasn't as easy for me to express everything the way I had planned. I mean, not because of Sam. I mean, he's a great guy. I'm not saying anything about him. Just the flow of ideas I had in mind didn't really come the way I wanted to, let's say. So I think maybe Sam was looking at him as a Nebius. I'm with him in my head now. Maybe he was looking at Nebius like more as a way of riding the AI infrastructure wave, which I don't judge. A lot of people look at it that way. And I had more of a focus on what I consider to be the competitive advantages and like why Nebius and not all the other companies. So I think it wasn't the flow I wanted to because of that. But thankfully, you all ended up converting sooner or later. So that was
mine was more later, and I wish I listened to you then. So I'm going to be a little bit more listening this time. But no, we get what you're saying. Sam ruined the podcast. That's what you're publicly saying.
No, not at all.
I love Sam so much.
Love you, Sam.
But,
yeah.
Okay, but yeah, perfect. This will be completely.
And not as I was saying, Nebius was my largest position. With WIX, it's a fairly recent position for me. I'm still learning every day about the company and base 44, as we'll talk about it. Right now, it's about 6-7% of my portfolio. And for some people, that might be a lot, but I'm a concentrated investor, so it's not that much in my portfolio, but it's still a sizable position. I'm not rushing to buy everything I want to because of the momentum we know SaaS stocks are facing. I mean, we never know when the SaaS meltdown will end. So I'm just like gradually adding on the way down, let's say. And that leads me to the second big difference, which is Nebius was in a sector that was clearly gaining momentum. Like at we were talking about it at the right time. So even if it was not the best company of the sector or whatever, it would have probably still had yield like good returns from the point at which we were talking about it, just by riding the wave of AI. And here it's kind of the opposite situation, with all the concerns around AI disrupting SaaS and like compressing multiples across the space. So yeah, totally different, let's say.
So
The third,
can I ask you real quick, what's your time horizon on these sort of things? I know, but just for our audience.
And also, are you fully built out at that size, or are you still building? And what size do you want to potentially build this to, potentially?
I'm not fully built. Like I still want to. I can't even check my average cost to tell you, but I think I could make it like a 10+% position. I'm not saying I will, because it will also depend on how the stock moves. Like if the stock continues to go down and goes to $50-$40, it's hard for me to make it a 10% position, because I need to constantly add more and more and more. And also depends on how my other stocks perform. But yeah, I want to buy more. I think it's too cheap to ignore. And I when I first started to buy, that buyback program of $2 billion, which we will touch on, wasn't even announced yet. I thought they were going to announce the buyback program. It was on my article, and they had one open still doing. I said that they were probably going to extend it, but I wasn't expecting such, like, it's, we will touch on that. But to Roy's question, I'm not sure what's my timeline. Being completely honest, I mean, it could be 1 year, it could be 2, 3, 4. I think it will depend on. I think it's too early to say with all of these vibe coding, because we have the WIX part of the thesis and we have base 44. But WIX is more of sort of, even though many people think it's a dying business and it's easy to disrupt, whatever, I think it's a more predictable business. But base 44, which is an important part of the thesis, is a bit uncertain, in my opinion. A lot of factors are still to be cleared away, let's say. So I'm not sure. It's not like a short-term position. Like it's not a trade that I want to sell next month whatsoever. I think the potential, like, I think there's a symmetry here that could give us like a multi-bagger potential if the market ends up recognizing the value and just putting it at like normal multiples. It doesn't even need to trade at the premium. But yeah, I'll touch that on the valuation, but I'm not sure exactly what's the time horizon. Then the other difference from Nebius was that I think the asymmetry on Nebius case was a big part of it was because it was relatively unknown. Like most people didn't even know Nebius existed. And here, WIX, on the other hand, it's a very well-known company. And I think the mispricing is not so much about people not knowing about the existence of the company, but more about people misunderstanding it. Like it's less about lack of awareness. It's more about how the market is interpreting the company and the valuation. Though a lack of awareness here still plays a role, because most people don't even know that WIX owns base 44. So I think it's a combination of both factors and not so much like Nebius case. Okay, let me check if the presentation is ready. I think it is.
Do you have
Just
slides?
put it into base 44 really quick. He's vibe coding his presentation right now.
Yeah, to be honest, I wrote my script according to my articles that I had written before, and just used Notebook LM to build a presentation. I think I can share my screen probably.
I'm going to sell my Google if this doesn't look good.
Yeah, it's the first time I'll look at it, so let's analyze it.
Also, just as we go through this, I'm sure there's people who have never heard of, like Lisa, for example, June was somebody in the chat who had never heard of WIX. So just pretend like we don't know what this is. Explain the core business. Explain the base for acquisition.
Sure. Okay,
as a Shopify investor, I've been known to to hate Wix. I have to. It's in my blood. So,
Is it
Yeah, you're good.
okay? It's PDF, so it should be like this. Okay, let's see if Google did a good job. Okay, so let me just put your faces here so that I can look at your reactions. Okay, so to start, I already explained this, but it's a very important part. When you buy Wix, you're buying Wix, the core business that everyone knows, but I will briefly explain more or less what it's all about, plus Base 44, which is a vibe coding platform that Wix acquired in June of last year. Let's start with the core business. Wix basically okay, this is related to Nebius, but okay. Wix is basically right now priced like a dying business, as if it were a simple point solution that's easy for AI to replace. So basically, Wix, everyone knows Wix as a website builder. You go there and you build a website in the most user-friendly and easy way ever. You don't have the flexibility that maybe WordPress or the platforms that the professional web designers use, but that's not the purpose. The purpose is to eliminate the friction and to make it easy for a non-technical user to build a website for a small business or whatever without relying on web designers or things that are a lot more expensive. But getting back to my track, Wix is priced like a dying business. And when I say it's priced like a dying business, it really is. It has a $3.8 billion market cap, and it's printing like $600 million in annual free cash flow. And this is in 2025. It's not forward. They didn't report yet the year-end results, but they're going to reach close to that value. And they're growing double digits every single year. And so if you do the math, they're trading at like 6 times free cash flow after this SaaS meltdown, which is crazy. But very simply, I believe that view is wrong. Wix is not simply a website builder like most people think it is. It's actually like, I don't know if these timelines are correct because I used AI to do the presentation, as I said. But Wix is actually a full platform that helps SMBs build websites, run e-commerce, accept payments, manage bookings, handle CRM, automate marketing, and so on, so on, so on. They have like dozens of features. It's not simply to build a website. It basically allows small and medium businesses to operate their entire online presence from just one place. And there are really businesses that rely on Wix for everything and that wouldn't leave it just to save a few $100 for each year, let's say. But to give you a brief historical context, which will be useful also to understand why I think Base 44 was such a perfect acquisition for Wix. When Wix launched in zoom in the presentation.
Yeah, you might also be able to just hit like what is it? F11. That would also zoom it in if you full screen it.
Okay, I don't think it will work. Maybe like this. It's better.
Yeah,
because I'm not using my usual setup. But so Wix was launched in 2006. Like back then, creating a website was still very complicated. You had to deal with hosting, technical setups, updates, maintenance, like domains, a lot of things that had nothing to do with actually running a business. So as I was saying, the breakthrough wasn't really some fancy technology. It was more about abstraction and letting non-technical users like build whatever they wanted to in terms of online presence. So they packaged design, infrastructure, hosting, updates, and later commerce, payments, and everything I've mentioned into a single platform that helped those non-technical users and that those non-technical users could trust. So instead of thinking like an engineer or relying on web designers to make you customize websites on WordPress or any other of the incumbent platforms, let's say, you could just think like a business owner, and you'd like drag and drop features to build your website and all that in very intuitively, let's say. And despite like over the history of Wix, every year, and I remember this as a kid because I started to build online businesses with like 12 years old, including websites. And when I was searching for solutions, I always thought, and I always viewed reviews about Wix as like terrible reviews, basically calling Wix a shit. And like, if you told me 1 year ago that I would be here pitching Wix, I would call you crazy, because I was already biased, like from my prior experiences of thinking that it was just a terrible solution. So despite many bad reviews, and these bad reviews came mostly from technical builders, because like, as I said, are not the target customer of the company. But I'm saying this because they became kind of haters of Wix, because they didn't understand that the purpose was not to give you the flexibility that WordPress or other platforms gave. And like, or maybe they understood that like, if I'm a web designer, Wix is kind of making me lose my relevance over time, and even Shopify and all those platforms. But Shopify is a bit different, even though they overlap, and you can call them competitors, obviously. So they kind of, their bad reviews weren't really important, let's say. Obviously, those were important, especially as I was talking about my experience when I was searching for website builders, and I learned that Wix was like not a very good solution. I totally discarded it. So it's not useless, but here for the core proposition of the platform wasn't really the target audience, the reviews from the target audience. But despite all that and all the haters and like all of what I was saying, Wix approach like worked extremely well. They scaled into one of the largest SMB software platforms in the world. They have close to 300 million subscribers, and they have a very strong brand. I think like 1/3 of the websites that go online come from Wix. I've read that statistic somewhere. I tried to search for the source for today, but I couldn't. And for millions of SMBs, as I was saying, Wix is not just the website where the business lives. It's where a big part of the company actually runs, like in a lot of sense. And that distinction matters because it means Wix is not a point solution. And this is very important for the part of AI disrupting SaaS and AI disrupting Wix. The most vulnerable companies to this disruption are point solutions, and the market views Wix as a point solution, and most of the public views like Wix as a point solution, as a simple website builder that doesn't go beyond that. But the reality is that it's not a point solution. It's an embedded infrastructure for small businesses. And I talked, when I released my initial article about Wix, I knew it would be a controversial thesis. So I got a lot of comments, some saying it made sense, some saying Wix, as I was saying, Wix was a terrible solution and there were much better ones. But I actually was surprised because some of my subscribers sent me like DMs saying, oh, I'm actually a Wix user. I have a small business that relies on Wix, and I'm not going to leave the platform anytime soon. So I will really look into your thesis, because saving like $200 or $300 per year just to switch to a vibe coding platform doesn't really compensate for all the friction and the risk associated with switching to another provider. And that was something that I found like important for this part of being embedded in SMBs. So with this, I'm not saying that it doesn't face a disruption risk or that it's the best company in the space. You can tell me that Shopify is better. I won't even argue about it. You can look at the numbers, but it's not a winner takes it all market. And I understand the threat that comes from AI. I just think that most people don't realize or don't understand that Wix is not what the market is perceiving and the general public perceives. Wix actually understood that those lower ARPU customers were the ones with lower switching costs. So when you say that Wix is, when I'm saying that Wix is not simply a website builder, it's true, but there are people and there are customers that only build websites. Like, so those are the lower ARPU users, the ones with lower margins and the ones that face the more risk coming from AI, because they can just, if they just have a website with no other features embedded, they can easily switch to another provider. That's true, and that's the main threat. Sorry, and Wix understood that, which is why the company started to focus on the embedded ones. Not like in the recent quarters, it was more like 1 year and a half ago, if I'm not mistaken. They started to focus on the companies, or on the customers, sorry, with higher switching costs, and that yielded better margins. So they adopted a somewhat defensive posture with this core business. Basically, they raised prices by a lot to the lowest level customers. Like if you only wanted a website, you got your price like almost doubled or something like that. And that's made on purpose some customers like those churn, which is why sometimes you see, as the bear case, sometimes you see creators posting like a chart with Wix paying users, and in 2024 there's like it's the first time it went down from 6.5 million to 6.4 million, something like that. We still need the data from 2025 because it's only an annual metric, not a quarterly one. But basically, that's the reason, because they on purpose let some lower ARPU customers churn, and they're focusing on the higher ones by locking them with multi-year deals. So instead of they also they raise prices every year. This is not something new, but they really aggressively pushed higher the prices of the lower ones just to make margins better and to focus on the more embedded ones. And we can see that the fact that the total number of paying users went down slightly in 2024. We can see that ARR managed to continue to grow at double digits. So the focus on the more important or higher quality customers ended up more than compensating for that, and revenue growth is even re-accelerating. So
are you sharing a different slide, or are we, because you're talking about numbers?
Sorry, bro. I totally forgot about the slides. I was just looking at you guys. Okay, yeah. Not sure if this even makes sense, but I think so. Yeah. So I'm not yet done talking about the core business, but just to quickly sum up what I already said up until now. Basically, the market is pricing Wix as a dying business because most people view it as a simple point solution that's easy for AI to replace. But even though the threat exists, that view is, in my opinion, wrong, because while you can use Wix as a simple point solution, most of its customers, or maybe not most of its customers, but most of the revenue of the company is attached to customers that use it as a platform and as embedded infrastructure, and not so much about that as that point solution. Management knows the threat, and more importantly, they know exactly where the threat is stronger. And as I said, they adopted the defensive posture, like to lock in existing higher value customers. But at the same time, they also adopted an offensive posture when it comes to taking advantage of all what's happening. And they did this by, and even before talking about Base 44, they implemented AI into the core business by launching over 1 year ago Wix AI Studio. And now very recently, they launched Wix Harmony. I'm not sure if you saw the Super Bowl ad. I mean, I'm not into American football at all, but I know they had an ad for this new feature or new whatever, which is basically vibe coding integrated into Wix. It's like what Wix does, but with vibe coding. So they're disrupting themselves before anyone disrupts them. Basically, I think that's the logic.
And they're just using Base 44 for that?
No. It's independent.
Okay.
So they used some help from Base 44 team to do it, but it's not like integrated with Base 44. It's completely independent.
Their Super Bowl ad was promoting the core business or Base 44? Or did
They
have
had
two?
two ads. They had two different ads. One for WIX Harmony and one for Base 44.
Got it.
Yeah, Base 44 has all the hype right now too. Looks to me, and this was one of my questions, Manuel. They have a little bit more debt than cash, although it's not anything scary or unusual. But the free cash flow margin expansion, it looks
And-
like the buyback is sustainable with this model.
Yeah, it is. By the way, these numbers are not correct. I think I have here a better.
Do we need the presentation? If it's just some random
Yeah, it's probably just some random stuff, but I can
We
probably.
can pull up their earnings slides from Q3 as well, Manuel.
I already immediately like from what you're saying, I'm curious, just because the business is sort of two businesses now, WIX and Base
Yeah.
44.
Mhm.
How much of your investment is based on WIX just being oversold and it's a value play here because it's still growing and maybe more defensible than people think, versus the upside of what Base 44 is and how excited you are for that part of the business? Because I remember the initial thing that caught me from your review was how much Base 44 might be valued if it was valued similarly to a Lovable or a Cursor based on its overall ARR, how much
Yeah.
that would be valued in the market alone today. Like how do you look at the investment?
I think you can look at it both ways. I think you can look at it as I'm buying WIX and I'm getting Base 44 free, or I'm buying Base 44 and I'm getting WIX free. I think the market cap is so low right now, in my opinion, of course. I think it's so stupidly cheap that you can look at it both ways. I think each of the companies separately are probably worth more than the current market cap. I'm personally only invested. I think if I wouldn't probably invest in any of those standalone. I think it's a good mix. I think, I'm going to get there. I think WIX is a cash cow that is a perfect match for Base 44, as I'm going to say later. And Base 44 is like a really good lever for the growth of WIX to reaccelerate and people to start looking at WIX in a different way. I'm going to start talking about Base 44 now, but
Let's just drop this slide because I'd rather look at a bigger picture of you. Unless you think there's something on here that you want to show off.
Okay, I'll just leave the first slide and yeah.
Yeah, or just
I can also just share this slide as well. This is from their Q3 earnings where they're talking about Base 44. I don't know if you want me to keep
You
this.
can, I mean, as you prefer. To me, I'm not even looking at the slides. You just remind me of
okay, good.
It's just some stats about Base 44, just in case people don't know.
Okay, let me just stop here.
Yeah, and for the people that don't know, like if be sure to do your own due diligence. Even though Manuel has had a lot of winners, don't just take his or our word for it.
Of course.
The other three of us are not in. And you can, like, one of the things you can do if you're interested in WIX, play with Base 44. It's available there. You can build stuff on it. A lot of people have enjoyed using it that have no experience with coding at all, and that's really the appeal. And then you can look at what others are saying about it on Reddit, on X, and other social media platforms. It's very hyped for a reason.
Yeah. So, where I was? Okay. So, besides integrating, like I talked about the defensive posture, about locking in higher value customers and like letting churn on purpose the other ones, and then the offensive posture of integrating vibe coding into the core business and not like trying to disrupt themselves before they get disrupted, let's say. But as we were talking about, the most important offensive move was acquiring Base 44, which is what I'm going to talk about now. So even if the core business is stable, you still need a path to long-term growth in a world where software itself is changing. I mean, I don't see a world where WIX as a standalone business will grow more than teens, let's say, per year, double digits, but I'm not really seeing it grow at 20-30% plus, not whatsoever. And I don't even think the valuation needs that to work, but that's a different story. But that's where Base 44 comes in. In June 2025, WIX acquired Base 44, and this wasn't about improving the website builder a little bit, or the platform, just by adding another AI feature. It was about extending Wix's core idea, which is what I talked about, the abstraction for non-technical users, extending that into a completely new layer of software, which is applications, and in this case, vibe coding, a new category. The company was founded by Maor Shlomo from Israel, and Wix is from Israel as well, just for context. And he had already built a venture-backed data company before, and at some point he was just trying to help his wife run her small business, and he wanted to get back to code. I mean, he had stopped coding for a while because of that venture-backed company, but he just got tired of that VC life and stopped, but he wanted to get back to code. So he was trying to help his wife to build a lightweight internal system to manage leads, workflows, and day-to-day operations, because I think she had like a tattoo business or something like that. And it was like, okay, this is the kind of thing that all these vibe coding tools are supposed to make easy. So let's try to use them. But bear in mind that this was like 1 year ago. Like, vibe coding wasn't what it is today. Things are evolving quite fast. So think about it when listening to this story, because otherwise you might think, oh, but nowadays that's easy. But that wasn't really the case back then. So basically, he thought that it wasn't as easy as it was supposed to. And even for someone like him that was highly technical, he thought that setting up tables, permissions, workflows, and all the edge cases inside these tools was a bit slow, a bit frustrating, and like exhausting in terms of trying to prompt something and getting something wrong, and prompt a different thing and getting something wrong again. And so for a non-technical user, this would be even worse. So Base 44, despite what some people think, wasn't born out of excitement of these no-code tools. It was more about frustration with the ones that existed at the time. So the insight was simple. You wanted to, it's kind of the insight of vibe coding in general. So instead of users learning the language of software, the software should learn the language of the user's intent, but more focus for the non-technical users, just like Wix was at the beginning for non-technical users to build websites, let's say. So if you look at the current AI coding tools, I would say there are 3 categories. First, you have tools for professional developers that help elite developers become like much more productive. And here we are talking about Cursor, basically. It's the best one. No one can argue about it, but it's not something that I would use. For example, I know nothing about code. I know, like, if I see a single line of coding, my head breaks. So it's nothing about the target customer of Base 44. But then you have the second part, which is sort of some much more overlap with Base 44, but you can still, for instance, go to a line of code and change something as you prefer. Like, there's some flexibility. You can see lines of code, let's say. You can change something in the infrastructure, something in... So it's kind of not for elite engineers like Cursor, but for someone that knows a bit about code. This is Lovable, Replit, other platforms like those. And nowadays, you can even use them if you don't know how to code, but the experience won't be the same. And Base 44 has some advantages that I'll touch on later for that type of target audience. So Base 44 aims to target a third category, which is for people who know nothing about coding and never want to see a single line of it, basically. So business owners, operators, creators, whatever, people who just want to build something that works, and that's it. They don't want to be picky on writing a line of code to make that thing look a bit better. Just something that works, whether like an internal system for your business or a simple app or a Pokemon game or whatever. And in that sense, as I was saying, it's very similar to what Wix was in its early days. So Wix was democratizing website creation, let's say, using this fancy word. And here Base 44 is democratizing software creation, even though there are also other options. I'm not saying, and just to be clear, I'm not saying that whether Wix is like the most innovative company in the world, nor Base 44. That's not what I'm trying to point. And that's not the core of the thesis, as you'll understand later. So basically, it's a platform that hides the complexity completely. And to make that possible, and this is the batteries approach, the batteries included approach that the founder had. The model needs access to real primitives like a database, authentication, integrations, background jobs, and the ability to safely evolve the application over time. That combination at the time didn't exist in a single place yet. For instance, if you use Lovable or Replit or whatever, you need to, for example, connect it with a third-party database, like usually it's Supabase or something like that. So this is where the founder wanted to be different. From day one, it was designed to be a complete end-to-end system. Database, backend, all of that infrastructure was already there and is already there. So users just have to build on top of that base, not around it. And that's why the name Base 44, because the base is already there. You just need to prompt your application and you don't need to deal with the backend stuff and all that. 44 is just about the founder's birthday, so it's not really important. But basically, it wasn't designed to be the fanciest vibe coding platform. It was just designed to be the most useful possible for non-technical builders, let's say.
So I'm going to cut you off real quick because
sure,
like that's all interesting, but why is it investable? Where do you see the opportunity here? You know, what are the comps on a Cursor or a Lovable that makes the third player? Which actually, if I were to, I was actually thinking of becoming a customer as you were saying that. I was like, oh, well, this actually sounds like me. But you know, why do you think that's worth standing alone more than $3.8 billion?
So I think it's worth defining, like, okay, what is the catalyst here? Because on one hand, you know, you could invest, because I have some of the same questions, which I'd like Manuel to address. But on one hand, it's like, okay, what sets them apart? Do they have a competitive advantage? Are they going to grow faster than competitors? On the other hand, it could be as simple as like, this is just way oversold at this point. And because I think, correct me if I'm wrong, Manuel, but they bought Base 44 for like 80 million. And right now, Base 44 is on track to do 50 million in ARR, going to 100 million in ARR. Like they're,
well, that was old anyway. That was Q3. But
so
yeah,
I can rush things to go straight to the point. I was just trying to give some context about Wix and Base 44, but my thesis is more focused on valuation, so I can go straight to that part if you prefer. Yeah. And also I really like the founder of Base 44, and that usually plays a good role in my thesis.
And he's still involved, right?
He runs the company. Like, he has total independence. Like, he can do whatever he wants, but of course not like that. But it's not like Base 44 became vulnerable to what Wix wants. If they have a suggestion, they send it to Mauer, and he decides whether it's worth it or not. He doesn't take like orders on how Base 44 should. But they have a lot of employees that moved from Wix to Base 44, but from the marketing team, not so much about leading what they should do.
Yeah.
But I can talk about that in a minute about valuation. Let me just give you just a bit more of context in terms of how it was born, let's say, Base 44. And so, honestly, I love the entire story of the company. I'm not saying again that it's the most innovative company in the world, but I love the story and the founder, because he really seems to be a smart guy and someone who deserves the benefit of the doubt. The story is simple. He didn't raise venture capital to build this. He didn't, as I said, it stopped his prior role because essentially was tired of that VC life. So he didn't want to raise funds again to do it. So what he did, he built it as a bootstrapped side project, and he started to document the journey on LinkedIn, like saying, I'm doing this, like just talking about it, not even releasing it. And when he released it, it started to it just went viral. It went to like in a few months, it went to $1 million ARR with zero marketing costs, just LinkedIn posts that went viral. He had over 150K users. So just from that organic strategy, he was paying the inference costs, the LLM costs from his pockets. So he was trying to manage it really like, and hence why you have some bad reviews from the beginning, because sometimes when it was going viral, the platform got a bit slow, something like that. But basically, if you check some of his interviews, I really like the way he thinks about vibe coding in general, and about where he thinks Wix is a good fit, where the company should go, and so on and so on. But moving to more of what you were asking, I think by joining Wix, Base 44 immediately gained three big advantages. First, distribution. Not only Wix has hundreds of millions of users that they can use the data to channel some marketing or whatever, so that they can cross-sell to Base 44, which it's kind of the idea of, if we're going to get disrupted, let us be the owner of the disruptor, let's say. So if they see some trend of, for instance, those lower end users we were talking about churning a lot because they were moving to a different platform or whatever, they can use that in favor of Base 44. And that's not the core, but I think it's one of the advantages that they gain. But they also have one of the most efficient marketing teams in the world. I don't think most people know this, but Wix is really a powerhouse when it comes to marketing. They really have a tremendous success. The chief marketing officer has been there for the past 20 years. In Wix, is a really smart guy. For instance, I just learned that like a few days ago. But if you go to any LLM and you ask what's the best website builder, you can do it now if you want. All of them, or most of them, will tell you right away, first option, Wix. And that's because Wix pays for that. Wix pays ChatGPT and all those LLMs to be the top choice for website builder. And I thought, at first I didn't even know that was possible. But when I found that, I asked some people to do it, because I thought, well, my algorithm is probably going to tell me Wix whether they pay me or not. But it was really funny. And I listened to an interview with the chief marketing officer. He really seems to know what he wants to do with Base 44. He said, like, we acquired Base 44. 12 days later, I called Super Bowl to get an ad, because I really know the strategy for this company. And I really think it's an underrated advantage of the company. Then they have the operational support. Exactly. They have the operational support. Like, Wix basically handles the boring stuff that's still critical, like infrastructure, billing, compliance, marketing systems, and so on and so on. So the Base 44 team is focused purely on product speed, which here is crazy. Like, the founder is really honest. He said, in vibe coding platforms like Lovable and the ones we were talking about, if we deliver a good feature, in 2 weeks, our competitor will replicate. And the same will happen with them. Like, if they release a very cool feature that we think it's worth adding, we will add it. That's why I think now product speed is what matters. And Wix here is helping a lot, because the other companies, and this is the third advantage, which is financial backing, the competitors constantly need to get external funding just to survive. Like Lovable, Replik, those companies are constantly raising capital on private markets just to survive. Wix, by even burning cash in Base 44, they managed to get like still $500-600 million in free cash flow per year, even with that cash burn, and even spending more and more on marketing than the other companies. So you're getting basic, and they even buy back a lot of shares. So I think it's a really good combination. But I'm going straight to now the valuation, which I think is like the core of the thesis, let's say, and then I can go back to other topics I had prepared. Let's talk about valuation. So no matter how you look at WIX core business, whether you think it's under pressure or a mature cash generator, or even if you think it's a great business, it's very hard to argue that the stock is priced for anything other than decline. Like, it's a company that has been growing every single year. It has a CAGR well into double digits. It's probably even in the high teens, 20s, I don't know, but well in the double digits for over a decade. And after this sell-off in SaaS stocks, it trades at like 6 times free cash flow, trailing, not forwards, with 30% margins. Like, I think it's really hard to say that it's not a business priced to like a dying business, as I was saying. But then on top of that, you get base 44 for free. And what private markets are essentially saying about these type of companies? Well, I agree that this is a very difficult business to value. It's burning cash. It's not really the most attractive one for some type of investors. I won't deny it. But to understand the gap, it helps to look at how private markets are valuing similar companies. Lovable was recently in December valued at $6.6 billion with $200 million in ARR. So that's 30 plus multiple. Replit is in talks to raise at $9 billion valuation. Like in this year, it was a Bloomberg article, very recent, with probably close to or even less than $300 million in ARR. So again, a 30 times multiple or higher. Cursor, I don't really think it's very comparable year, but we can even look at it. Last year, it's raised at $30 billion valuation at $1 billion ARR. Again, at 30 times multiple. So across the board,
they're at $1 billion of ARR.
Yeah, they reached that in 2 years.
I thought they were at 200 million.
No, Cursor already reached 1 billion. It's crazy.
Changes quick, I guess.
This is pretty cool. Base 44 and Lovable basically have the same number of users, but Lovable is valued at 6.6 billion. Meanwhile, the entire WIX business plus Base 44 is under 4 billion.
Yeah, exactly. So across the board, vibe coding platforms are being valued at very high multiples. If you compare that with WIX and Base 44, which is $3.8 billion for both, it's just stupid. And to be fair, I understand the argument that Base 44 deserves a lower multiple than some of those peers, because it's less, just like WIX over the course of its history has always traded at a lower multiple than Shopify, for example. It's a totally fair argument. But even if you slap like a 10 times ARR multiple, which is a third than the other ones, it's already like, it depends on how much ARR they reach by the end of this year. But just to put some context here, when WIX acquired Base 44 in June of 2025, they were doing about $3 million in ARR. It's not, we don't know the exact number, but it's low single digits. I read 3 million somewhere, so I will stick with that. If it's not 3, it's 2 or 4 or whatever. It's not really relevant. So they went from $3 million in ARR in June to more than, we don't know yet, again, the concrete number, but we know that it's more than 50 million by the end of December. So in half a year, not even that much, they went from 3 million to 50 million. And the users, the number of users from June to October, which was the last update, the last earnings call, 7x. And the traffic share from similar web data went from 1 to 2% to 10% in a few months. All because obviously of the marketing. And now they can, as I was saying, they were mostly relying on viral posts on LinkedIn and so on. And now they really have a strong marketing team. When they acquired Base 44, it was just a solo founder. It was just, I think they had a team of 5 or 6 people, because he had just hired them before the acquisition. Now WIX, just in marketing employees, they sent the 50 best marketing employees to Base 44 just to put the company rocking. So,
dude, I
they
just
said-
checked their. Sorry, just going ahead a little bit because you brought up the similar web traffic. Their traffic still into January is growing.
If you
Like-
want to throw it up, Tanner, you can.
It's up 23% month over month in January.
it's crazy.
There-
It's crazy because
There's a chart that Manuel reposted too, showing just the traffic that was released by Base. Here we go. I've got it right here. Let me throw this up.
SoFi's was up 17%, by the way, Manuel. Maybe you should check out that name. But all right, let's go.
This is the CEO or a Base, and this is prior to the Super Bowl ad too. So
I can't see it. You got to zoom.
That image. Yeah, there you go.
yeah, it doesn't have the y-axis because
No,
of
but-
we can't share it.
yeah.
But they said during the call, so in October, I believe, that they were already having over 1,000 paying users per day, like new. So if we look at that chart, it clearly tells us that there should be now at some thousand users per day. And the similar web data, it's not the most accurate, of course. It doesn't tell you how they are monetizing users. For instance, if you compare Replit's data with Base 44, Base 44 already surpassed Replit in terms of last month traffic share, let's say. And Replit was now valued at $9 billion. I think Replit is probably monetizing the users in a better way because Base 44 now is probably relying a lot on marketing because of WIX, but that's normal. But as I was saying, we're entering into a phase where the advantages come from product velocity and brand awareness. Because I don't think it's that hard for someone now to come up with a vibe coding platform, but it's a bit hard to come with a vibe coding platform that people will use, because it's, again, the same thing about software and all them getting disrupted. I think Base 44 was acquired at the right time to be able to get a good enough pie of the market to completely justify a much higher valuation that it is being worth.
But what was the acquisition? Was something like $80 million or something, right? It was something great. Like, why did they sell in the first place? That was unbelievable.
Because first, at the time, it was $3 million. So it was kind of a 30 multiple, like the other ones are
Yeah.
in private markets. But yeah, he explained that in an interview. First, he didn't want the VC style that I was talking to. He was tired of VCs. What he wanted to was to continue the company on his own. But after talking with WIX CEO like for a few weeks, like through WhatsApp, like they were talking about it. They were both from Israel. They met each other. So he made him realize that he wasn't going to be able to compete without having financial backing. So it was whether going VC or getting the right partner. And I think here was a much, much better way, especially for the reasons I told you. Like, they don't need to rush to get fundraising. Yeah. They are still profitable, even cash burn. Because a big concern from investors is that Base 44 is a drag to margins. But management said that even with this drag, they are going to be at least mid-20s free cash flow margin in 2026. So if you consider the revenue growth, it will probably, the free cash flow stay flat, like in the $600 million. Because they said that the core business will go above 30% if you completely exclude Base 44. So you're buying WIX, which, okay, you can call it whatever you'd like to, but which on its own, excluding Base 44, generates more than $600 million in annual free cash flow. And you're getting a very hot AI startup that just went from $3 million in ARR, and I bet they're going to cross like $100 million like before it reaches 1 year of the acquisition, let's say. And you still get consolidated 25+% free cash flow margins, buying back almost or more than half of the company, like completely opposite of investing in the private market, but at the same time having the upside of the I'm not sure if it's clear, but
please don't skip over that buyback, because I think whenever you brought this company up originally, I don't think that was part of the case, but I think that's such a shocking number that people need to understand what the market cap is and what the buyback is over the next 2 years.
So I think that's like the third part of this thesis. It's like, okay, base 44's growth, WIX's cash flow, and then this buyback. So maybe talk a little bit about that.
Yeah, and I think there's something important also about the buyback.
Yeah, keep in mind, guys, this is a slightly less than a $4 billion market cap. And we just went through the comparable numbers for base 44 competitors in Replit and Lovable. They're right now valued higher than that $4 billion, even without considering the WIX core business, which has a $600 million free cash flow. But talk about this buyback. What's their cash on hand right now, Manuel? And like, what's this buyback?
So they recently raised, I'm not 100% sure, but I think the raise was already planning a buyback because of the meltdown that they were seeing. But they raised, like, not that recently, but recently, $1 billion or $1.5 billion in convertible notes at 0% interest rate, and the convertible price at $200 and something. So
today it's 69.
Yeah. Not 1.5. I think it was $1 billion. So the $2 billion buyback allows them to buy those notes as well, not only the like shares. So even if you assume they buy all of those notes, which for instance at this point doesn't even make any sense, but if they were to decide to buy those notes, you would get left like $1 billion, which would still be like almost 30% of market cap, like 25-30%. So just to make sure that this is clear, because it's not really they're buying straight like $2 billion of shares. They can decide to buy $1 billion of those convertible notes, or like $500 million and 1.5. But just the fact that it's scheduled to be in 2 years, it's really aggressive. They had already a buyback plan open in the last reported quarter. I think they bought back like $200 million in shares. They're in a really good position. It's sustainable because they have the same cash as they have in debt, and most of that debt is these convertible notes that have 0% interest. I was really surprised with that, especially with all the negative sentiments like in SaaS stocks. I was really like, why the hell are these guys lending the money at 0% interest rates? Yeah, they have $1.5 billion in cash and $1.5 billion in debt, basically, being $1 billion associated with this. So they have, and $600 million in annual free cash flow. So they have plenty of flexibility to do it. Even if they decide to buy some convertible notes.
That's their entire market cap, guys. Like 1.5 billion in cash, 1.5 billion in convertible, and 600. It's like 3.6. That's like their entire freaking market cap.
No. In the cash,
the is the convertible.
Yeah.
Okay, got it.
But still, I mean, and the SBC isn't really that high for a software company. You could even say, because of the SBC, the share count doesn't decrease that much. Well, that's not the case. And an important factor, because I think, as I said, they guided for the core business as a standalone to improve margins in 2026, so to go over 30%. And I think a part of that is because they're going to like cut a lot of jobs. Like if you check the employee efficiency metrics, and compare them, for example, with Shopify, they have a lot of room to improve. And they already started to do some moves. Like they recently introduced they got back to 5 days a week at office in Israel. It was like a very controversial move. Like it was on the newspapers of Israel. Everyone was trashing WIX. And I think that was one of the reasons why the selling pressure was even larger than in other SaaS stocks, because a lot of Israeli funds held some shares in WIX, and they sold after this like controversy. I think it's, I mean, being a bit overly dramatic, let's say, like just sell shares just because the company is returning to 5 days a week at office, especially when they were like 4, like they just went from 4 to 5. But I think it was a deliberate move to get some voluntary layoffs, let's say, and not have to pay them. Because as I was saying, if they cut like half of the jobs, I think they can still do it, especially now with vibe coding integrated into the core business as well. I think a lot of there's still, even though they already have 30% free cash flow margins, which is pretty impressive. I think there's even room to go further than that, and gross margins have been stable, so there's no sign of them needing to cut prices or whatever, because they even raise prices, as I was saying. So I think they're really in a good position.
On the headcount, that was one of my questions that was going to be for you. They have 44 employees, I think. How, like, to me, it's a PayPal level of bloat given the size of the business, and maybe some of that came from Base 44, and maybe it's very warranted given that that side of the business is growing really rapidly. I'm kind of curious how lean you think that they'll eventually become, or is it just going to be, you know, maybe that they'll cap where they're at for employees for the most part and grow into that through Base 44?
Just to be clear, it's nothing about Base 44. When they acquired Base 44, it was a team of like 6 to 8 people tops.
Okay.
So they're actually moving people from WIX to Base 44.
Yeah.
So I don't think they're going higher than that. I think it's quite the opposite. I think they're going to decrease the number of employees. They don't need it. Also, a very important thing in this context is the CTO recently sent a letter to the R&D department saying that it's time for AI to write our code, and like AI is going to be a centerpiece of our R&D department, which to me it felt like prepare for a lot of you to go away. Like he even published the letter on X. So I think it was more of like an affirmation to investors and shareholders to like, it's time to be even more efficient, because Base 44 is dragging margins. So maybe they're trying to compensate that. And even if Base 44 didn't exist, I think it would be smart. I mean, it's obviously never good to the families that are affected. I understand that it's a difficult situation, but from a business perspective, it makes all the sense in terms of WIX getting more efficient.
So that's a potential catalyst, is layoffs. Like if we could potentially see a 10% layoff or something like this as they tighten the belt. What do you see for, I was surprised whenever I took a look, there's no insider buys recently. Like, I mean, is there no double down by the team to say, hey, this is too cheap, or that's only via buybacks?
I think a $2 billion buyback is enough. I mean, I understand your point. I don't see like any insider buys as well. But as I was saying, I was already predicting a buyback plan to be extended. But I think doing $2 billion is an affirmation of, we think this is stupidly cheap. I mean, yeah, they could buy some shares, but I don't think that's really.
What do you think at this price in terms of, are they an acquisition target?
Yeah, that was going to be my question.
They're down 70% on the year.
Is there even an appetite?
I just don't see like who would acquire WIX.
Shopify.
Yeah, but why?
Base 44.
Still, I think Base 44 was really like, but there were some people, but I think was just random rumors saying that Google could buy Base 44 or WIX to get Base 44. But at the same time, Google has its AI studio, and because Base 44 is a model agnostic company, they can switch. They use Claude and Gemini, and I think they have a pretty good partnership with Google. So a lot of people are like, why the hell they would give so much benefits in terms of Gemini to Base 44 if they didn't want to acquire them or something like that. But I don't think that's the game the founders want to play, both the founder of Wix and the founder of Base 44. Because if Google or any other larger company were to acquire Base 44, they wouldn't let them work as a standalone company like Wix is letting them, or at least not with the same flexibility. So even if there are some companies considering it, I don't think management wants that, basically. I think, especially as they have information on how Base 44 is actually growing now in 2026, which should be like, I think we could see the company closing the year at like $200 million ARR. Profits is completely different. They will be burning cash. But if we check like Replit, they went in 1 year from $3 or $4 million in ARR to 150, and they didn't have the financial backing that Wix gives to Base 44. So,
Manuel, you said 200 million that they'd close out the year. Are you meaning like 2026 that they'd close that out, or are you saying this earnings coming up on March?
No, 2026. Yeah.
Okay. Yeah.
I saw Lovable was 1 million to 100 million in 9 months.
Yeah, they're just growing super fast, and they don't have the same marketing team as now Base 44 as with Wix. I mean, I'm not even like counting on a Super Bowl hike. Like, it will probably exist, but I'm not really considering that, especially because I didn't even know they were going to have a Super Bowl ad when I invested. Not even Wix or Base 44. They just came out with 2 out of nowhere. But I think the trend is clear in terms of ARR, and that will in turn make the market look at it in a different way. Because I think up until now they were like, okay, Base 44 like 2 or 3% of Wix revenue. Why the hell should we care? Actually, it's a bad thing because they're dragging margins down, blah blah blah. I think that's kind of how the market has been viewing that acquisition so far. And I even saw some fund managers from Israel that were mad at, like, I think Wix is hated by a lot of hedge funds in Israel. I'm not sure if management has some beef with them or something like that, or if it's because of the 5 days a week off at office, or a lot of factors, different factors combined. But I think, and I was going to touch on this, the cash drag from Base 44, and here I think my experience, let's say, with Nebius allows me to think of it in a different way, which is, let me just push here for the margins thing I wanted to say. So one of the big concerns from hedge funds is that Base 44 and vibe coding platforms in general will never be profitable, let's say, or will always be a cash drag. So it's not worth it for Wix, let's say. But there are several ways that Base 44 could improve margins over time. First, the AI costs are kind of front-loaded because when a new user joins, they generate a lot of prompts to build the app or whatever they want to build. And then once it becomes a build system, the usage and prompts shift more to maintenance and small changes and not so much to build the application itself. So that alone makes the cohorts mature and costs decrease significantly for the existing users that have already built what they wanted, let's say. Second, as we know, LLM costs are falling fast. Like Wix said, they had a conference in December, and they said that from June to December, so they acquired Base 44 in June, LLM costs, like the inference costs, had already declined by 30% just in a few months. So there are more providers, more competition, better open source models, all coming out at a time. So Base 44 isn't locked into a single model, so they can switch providers as these efficiencies come to happen. And third, there are also optimization improvements that can be done at scale. For example, when we talk about the GPUs getting obsolete and that bear argument, I always say that older generations of GPUs are not going to be obsolete, because there's a hierarchy of workloads, and each GPU will find its place in the hierarchy of workloads. You don't need a Blackwell to do a text-to-text inference task. You don't need a Vera Rubin to tell you how's the weather today or how will be the weather tomorrow. There's a hierarchy of workloads that will eventually, over time, put each GPU in the place where it's more efficient on a token base, like on a performance per dollar base, let's say. And here it's kind of the same thinking, let's say. They can, over time, routine simple tasks to cheaper open source models. They can use caching, improve prompts. They can redesign parts of the product, like the batteries included approach I was saying, like the database, all stuff they can improve over time. And then marketing. I mean, now they're pushing marketing as fast as they can, and I think it's the right strategy. Like, capture as much market share as they can at the beginning, and especially while the competitors are still small and still rely on external funding. So I think that's a really good advantage that they need to focus on, like, from the beginning. But over time, marketing efficiency will obviously or hopefully improve, just like with any company, like after they pass the startup phase. So I think first, being a drag to consolidated margins doesn't really scares me, because of the huge cash cow that the core business is. Like, it's not really, it's kind of a flex to stay at mid-20s or higher free cash flow margins while having a startup dragging your margins. So that, to me, feels like makes me very secure, let's say. But I even think that long term, and management believes as well, that Base 44 itself could have good margins. So I don't think it's a relevant bear case. I would even put more emphasis on, like, competition, let's say, being better than margins itself. And I can talk about what the founder of Base 44 said he considers to be the main risk for the company, which is basically one of the model providers winning the race. Like, that's the main bear case you can point to Base 44 or any vibe coding platform, because Maurer has been explicit that competition, and we just talked about it because of margins, competition among model providers is healthy for platforms like Base 44, but a scenario in which a single model developer fully dominates would be very problematic. And he even talked about Google. He said Google is the thing that keeps me up at night when we think about this risk, let's say, because if one provider were to control most inference, tooling, distribution, the balance of power overall would shift away from this application layer that Base 44 is trying to build, and all the other companies like Lovable and wherever, and that would compress margins, would dictate unfavorable economics, because Google would just say, oh, you want to use Gemini? Okay, you need to pay us what we want because it's the best model out there, and without it, you can't really get like the best vibe coding platform out there. So the way Base 44 mitigates this risk is by having a model agnostic platform and like optimizing across providers, but that doesn't really eliminate the risk. They use, like, whenever a new model gets released from Claude or from Gemini, in 20 minutes it's updated on Base 44. Like, that's not a problem. But the same for Lovable. It's not really like bragging about their being quite fast, but they have clear like agreements with Claude, with Gemini, so they really have that advantage of moving from model to model. But if Claude or Gemini or even ChatGPT, if they kind of win the long-term race, that would be problematic for every vibe coding platform, but I guess that would be problematic for the world. Let's say I'm personally not betting on that to happen. I agree with him when he says that if it happens, it will probably be Google. But yeah, I think it's relevant because it's probably the most important risk when it comes to a complete failure, let's say.
So one of the things that you may know, Manuel, I sure don't. There seems that there is some traction for sure for developers and coders. There is some traction for those that are non-coders, like all of us, except for maybe Tevis. And there's at least an opportunity there to cross-sell to their existing client base with Wix. Which do you think is where Base is getting the most adoption and the real opportunity, or is it just all the above?
I think it's not so much about capturing customers from Wix. I think it's really more about building applications, whatever they are. Like Maurer said, and this can be maybe a marketing strategy, but he said like 2 weeks ago that he got a call from a client saying, "Oh, we just canceled like a contract with Salesforce that was like 300K a year for a simple app that we built on Base 44." I think CRMs are vulnerable, not Salesforce, because the bulk of their contracts are like much larger enterprises. They're not really, this type of contract doesn't really affect them, but like the SMBs, CRMs, even normal applications, not so much website creation. But that's something very interesting. I'm going to send you, Tanner, so that you could share. Base 44 now has something which is like, you have a website, you put there the link, and you can like edit your website on Base 44. It's really interesting. And the product speed is something I really like. Now today they released the backend as a service tool, which is a complete new revenue stream. Like, I think Maurer is really onto something. But let me find that website thing, because I thought it was really cool. And it's kind of okay. It's here. I'll send you the link, Tavis.
So while that's being pulled up, my thought on like the Base 44 and the Wix customer base is the opportunity there seems like you'll get some, cross sell, you'll get some from developers and coders, but for the most part, it seems like the biggest opportunity, which kind of fits Wix very well, like you said, they're sending marketers over to Base 44, is those novices like us that want to build something but want a user interface that's a whole lot easier for us to understand than Claude Code. Is that kind of what's going on with Base and what they're trying to market it towards?
Yeah, basically. It's like what Wix was in 2006.
Yeah.
For website building, it's what Base 44 is trying to be.
Yeah. Okay. Thank you.
And so let me make sure I got the math correct here. For the buyback that's coming in, it's over a 2-year period, $2 billion buyback on a $4 billion market cap. So that's like a 25% buyback yield. Am I doing the math there right? I think so.
Yeah. It can be even higher because they can decide not to repurchase the convertibles.
Right.
Like, it's a $2 billion buyback that can happen to also include the repurchase of convertibles. But they can decide not to repurchase any convertible and buy back all in shares. I think they will decide depending on how the stock will evolve. Because if the stock remains here, it makes sense to buy back a lot more shares. But if it suddenly goes to $200, it's a bit like you're repurchasing shares but issuing at the same price. Like, it's kind of offset. So I think it will depend on how the price evolves and how this meltdown in SaaS stocks. But yeah, you were thinking the correct way. It's at least 25%, considering the worst case scenario.
Then, because my problem with Wix is any time that I've tried to buy a name that I felt like the valuation was so cheap, it's actually honestly done me more harm than good just buying the expensive names that honestly lead the market. been a long-term shareholder of Shopify because I'm a big believer in the e-commerce space, and think that they'll survive in a AI world and stuff like this. But WIX is still growing. I guess one of my concerns is that as we're sort of seeing a shifting tide here. Maybe they're not just a website builder, but a full operating platform, what have you. But I mean, PayPal would tell you a similar sort of narrative, that they're not just a wallet and they're, people's lifeline for payments online. And then you see them guiding for negative growth. So, I guess, how are you weighing into that? Like, is there a possibility that growth actually slows, and the only thing that's actually remotely holding up the business is base 44, but WIX actually looks less like a benefit and more like a weight? Because PayPal, I would say a similar maybe venture that they did was acquiring Braintree. And there were many people that actually suggested that Braintree would have done better if they were never acquired by PayPal. So could WIX almost be a weight on base 44 in their valuation? Because I don't think that they would be valued like this if they were a standalone company.
Yeah, let me say that I get your point about preferring to buy the winners, let's say, instead of the hugely discounted companies, which is, I also share part of that skepticism. Otherwise, WIX would probably be a much larger position in my portfolio. I also have that fear that whenever we buy too much of a value stock, most of the times, or quite often, it's a value trap. But I think here, that analogy of PayPal and Braintree isn't really the best, because Braintree is a very different business from base 44. I'm not sure, because I'm not the most familiar company with PayPal in terms of each segment, but I assume Braintree was already profitable when PayPal acquired it, or close to it. So in here, base 44 without WIX, they wouldn't survive unless they would go through the VC play kind of business, or getting another partner. And I think WIX, it has always been, not always because of COVID, but those shards are good. It has kind of been compounding quite consistently. It's not a company that grows a lot in a year because of a particular reason, nor a company that is lumpy in terms of growth. I think because of that embedded usage base, they also have then the transactions revenue, which is they catch a fee whenever a business sells to its customers through WIX. Then they have the partners revenue. They have different levers to pull. I mean, it's difficult for me to say for sure that they're not going to see a slowdown in the core business, especially with this risk from AI. But I think it's, even if you value it as a 0% growth from year forever, or even a declining one, I think to me, and even of course going against that argument that it could be a value trap, I just think it's too cheap to ignore, man. And that's why I bought it, because I don't think WIX is a wonderful business. I think it's a very efficient one and a very good, very healthy one, let's say. I don't think base 44 is a fantastic business, but I think WIX and base 44 together are worth more than 2 times what it's trading now, easily. And
by the way, the market also, Wall Street, I think, has a upside on this company today at 130% upside right now.
Yeah, they and that's after a huge round of downgrades. Mm-hmm. They all had 200 plus, even some at $300 price targets, but of course the price went down, so they had to cut the price target. But yeah, Wall Street.
But this all just feels very like I don't know. PayPal had this exact same thing where the stock fell much faster than the downgrades, and
but PayPal was
the business was extremely solid, and the buybacks were heavy.
Yeah, but
So
the thesis here is not just about buybacks. And
what I would
yeah, go ahead.
what I would say, somebody that knows PayPal quite well and seen how this plays out to my pain is that the Braintree acquisition versus Base 44. There's a few pretty substantial differences. I'm not sure that something like a Base 44 is actually going to become commoditized like Braintree. I think it was inevitable that it was going that direction. One of the differences as well. So vibe coding, yeah. If you're looking at it from the developer standpoint, the coder standpoint, there's going to be a million different platforms you could do it on. Claude Code is like really good. Google, my brother uses it a good bit as well, and there's a lot of others out there. But for those that are for like the three out of four of us that don't really code, you need something. Well, at least you don't necessarily need, but a lot of people are going to feel a lot more comfortable just to do something that's familiar, that's talked about, that people kind of know and recognize, that is well understood, and there's a lot of support out there for it. Could that come along with others as well? Possibly, but the TAM here is so immense on what people can build and develop and grow. If it's going to become a commodity, it's, I think, a long ways out. The other thing is, as far as a business, Base 44 is a lot leaner and newer than Braintree ever was. I think that the founder of Base 44, the little bit, and is it Shlomo? Am I saying it right? The last name?
Yeah.
I'm probably saying it wrong, but regardless, he's a lot like Bill Reddy was for PayPal, where he's stuck around for a while, became the number 2. But Bill Reddy was not the creator. He was somebody that was there, kind of like a Tim Cook type of guy. I'd give him a little bit more credit than just being a pure operator. Versus Brian Johnson when he exited, he was the innovator that just, I think within a year he was gone from PayPal. This guy seems like he wants to stick around, that he wants to see, and that's the reason for the acquisition, to grow. And WIX seems like the perfect partner, that their customer base, or who they've been able to target very well with their marketing, just lines up perfectly with them, and that they're going to let him grow and innovate. In fact, they announced, it's a standalone app now. You don't have to go through anything else at this point. So I think Braintree was a great acquisition for PayPal. I think that this is even more substantial. And honestly, if it wasn't for Base 44 being acquired by them, I would see it as a value trap. I think that the business is in slow decline, or deceleration at least, if not outright decline, outside of Base 44.
Well, let me ask just on Roy's point. Just a quick question, because that's what I'm trying to understand. Like, what is the inherent product advantage that vibe coding on Base 44 or Lovable or Replit would have over the LLMs? Like, I'm using Claude Code religiously at this point, and it's amazing. Like, it's come such a long way to vibe code directly from the LLM versus using these vibe coding tools. And so, like, I understand that's a problem that's going to affect the growth rate across the board of these types of products, not just Base 44, but is there any competitive advantage, or is it just like, hey, Dev, like the market is big enough, they're all going to grow, and it's not a winner take most type of market? And on that point, like, my fear is it just going to be whoever spends more in marketing? Like, they have to keep spending in marketing to keep acquiring those users, because there's so many comparable product offerings out there.
So I think I could argue about some advantages, like what I said about the application layer being built for non-technical users, or the batteries included approach where they include the database and everything, and you just need to build on top of that. That could be the most defensible reply. But I think, to me personally, it's more of the side that you mentioned of it's not a winner takes it all markets. And you, for example, using Claude, you're using Claude. But what if tomorrow Gemini comes with a much better model? You're using both on Base 44 or Lovable or whatever. So I think here it's first, I think even though there's some overlap, a very considerable overlap, I think there's also a different niche of target customer that would go more towards base 44 than Claude, even though there's obviously a big overlap. But I think the most, even not trying to defend base 44 for the reasons I said, I don't think it's a winner takes it all market. And if it becomes a winner takes it all market, yes, it's probably going to fail. But I don't think either Claude, Gemini, or ChatGPT are going to take the market. But yeah, both that concern and the PayPal concern are the two questions that I get most often. Like, why is this not a PayPal story? Like, because I think people assume that now that not a lot of people, because no one talks about WIX, but when you see someone talking about WIX on X, is to mention the buyback, because people got surprised about the huge buyback based on the market cap, and I understand it. And it made some people think that my thesis is about the buyback itself, when it's just a very good lever to pull.
Yeah,
especially in earnings per share growth, because the margins drag from base 44 could very well be more than compensated just by the buybacks, and then it translates into higher free cash flow per share or even earnings per share, both. So the claw, I think the fear is understandable, and there's clearly some overlap, but I compare it with like WIX in its early days, and like, why would I use WIX if there is WordPress, or why would I use WIX if there's Shopify, and here Shopify is like Claude and Lovable is WordPress or something like that. So I think those are valid concerns. I think there are valid concerns overall when it comes to the overall thesis, but the main point here is the valuation already discounts all the risks I can think of. And of course, this is not, it's quite a controversial thesis, and I'm aware of it. I like most people actually, besides my subscribers where we talk more deeply together, most people really come to me and say, you're stupid. Like, it's really controversial, and I'm aware of it, because there are relevant concerns. I won't ever deny it, and there are relevant risks. But I think overall, the team is the right team. The match is the right match between the two companies. And the team, when I say the team, is the overall team, both base 44 and WIX. And I think there are mitigating factors in place that could make this work out very well. And I mean, being valuation the most important one. I can't deny that my thesis is focus on valuation. If you put like the double of the market cap, it would still look cheap, but probably not cheap enough for me to bother, let's say. Or maybe it depends on how base 44 evolves from here. Because now base 44 is like 2 or 3, not now, but the last time it was reported, it was like the second call after they acquired it, and it was like 2 or 3% of revenues. No one bothered about base 44, but they're starting to put base 44 as like the first page in the shareholders letter. So they're bothering, and they're giving a lot of relevance to base 44 because they know the potential. And like, so in 1 year, if base 44 is 20% of revenue and it's growing like 100% per year, WIX as a consolidated business won't be growing at 10% per year. And then the market will like look at it in a different way. Because if base 44 starts to be the trigger for a significant reacceleration of the overall revenue, which I think is very possible and likely, I think then the market and mainly institutions will start to look at base 44 not as a drag and more as a catalyst for growth. Because I'd rather have a company growing 30% with 25% free cash flow margins than a company growing 10% with 30% free cash flow margins. You see, like, I think it's a good trade-off, let's say. Not saying that's necessarily going to happen.
So real quick question. Earnings are coming up, I think, March 4th. Is it the ARR that you're looking at the most for base 44, or what are you looking for as confirmation of the thesis versus
they don't yet report much on base 44, so there's not much I can ask besides a good ARR number.
But I'm sure
Like-
that's every question. If I were to venture a bet, that's the WIX earnings call is almost 90% of questions is probably about base 44. Is that not true?
Not yet, but I think it will inevitably reach that point.
Wow.
Because I mean, it's quite recent now. Like in the last earnings call, they had acquired base 44 for like 4 months, so they couldn't say much. The main points that analysts were concerned were margins. Basically, they were really wanted to know like how would margins look next year, meaning 2026, because of base 44, and that's why management gave that guidance of mid 20s free cash flow with the cash drag included. So I think from now on, probably there will be a lot more questions about base 44. But so far, I think it has been more about the concerns about AI disrupting the core business rather than the focus on what they're trying to, like, more on the defensive posture than on the offensive one, let's say.
Dude,
And
I
when-
feel like if they just changed their company name to Base 44, like
Yeah,
the rebrand
that's
effect.
something I think, like, if the market doesn't give them credit for base 44, what stops them from spinning off and putting it like as a listed company?
Yeah, that's the thing is like between where they're at right now as a business anyway, the buybacks and base 44, it's like it's cheap. Now, cheap can always get cheaper, especially in the current anti-SaaS environment.
Of course.
Express Investing said WIX 44. That's what they need to do is just change their name to WIX 44 and they're good.
No, but just to be clear, I understand all the bear cases, and I don't think it's wise to call a bottom, like to call a clear bottom, especially because of the momentum in SaaS stocks. I mean, I thought it would be the bottom at $75, and I was buying it, but I was not rushing, to buy it as much as I could, because it can clearly go down a bit more because of all we're going through. I mean, we're seeing companies, like very well established companies, trading at multiples never seen. So I'm not calling a bottom. I'm not saying this is a super low risk play, but I think it's quite asymmetric. And we just, even if just this meltdown in software as a service stocks like starts to fade a bit, that would be enough for them to double. Like, even if you just ignore base 44, I think they're trading like 6 times free cash flow of last year. And even with the cash drag, free cash flow on an absolute basis will probably stay the same, like flat. At least that's what analysts are estimating, like staying at around $600 million. You put some buybacks and the free cash flow per share still increases at like double digits. And how are you getting like a 6 times multiple? I understand there's some risk, but if the company consistently shows that the risks are overblown, I think a re-rating would come, regardless of base 44. But I agree that I wouldn't invest in WIX as a standalone business. And I wouldn't, just like I wouldn't invest in base 44 as a standalone business, unless for the right valuation. I think here the thesis is more about what you're buying, the two assets that you're buying for a price of half of each. Like,
let me ask this, Manuel, because 2 people asked it right now. So Martin asks, buying back stock at the smaller market cap is a red flag. Have they got no better use of that money? And then Matthew asked, why aren't they using that money to do an M&A? And the fact of the matter is like buying base 44 for 80 million is like the biggest robbery in modern markets. To get it.
Yeah, you're essentially saying you wish they would have paid $2 billion for it.
Well, no, my point is like, if they now have, billions at their disposal, and they already have that ability to spot, up and coming,
that's not the culture of the company. They're not an acquirer. They compound features, but they realize that they're entering in a phase where the core business faces a threat. And what's better than trying to disrupt ourselves than letting others disrupt us? I think that was the case. And it was a very special case. Like both teams are from Israel. I think they know each other. Like it's the perfect. You don't find the perfect acquisition every year. I don't even know any other acquisition that Wix has made over the past 20 years. Probably they made some small ones to add some features, but that's not the purpose of this acquisition. So this acquisition was not a pivot, was not like we needed acquisitions to grow. I mean, you can see it that way, but it was more like of facing the threat of the market by extending the purpose of your company to other layers of software or other layers of like in this case applications. But I don't think they would acquire other companies just because. I think it's a company with the right culture in terms of organic growth, adding new features, trying to constantly improve the product and not so much rush for inorganic growth just to grow for the sake of it. Regarding like having a small market cap, why would they buy back shares? I mean, they have a small market cap because the stock has been punished a lot. I mean, if you check Wix like 2 years ago, the market cap was like $20 billion or something. So they're buying back shares exactly because the market cap is low right now, and because they understand it's low. So I don't think, I think it's a non-question. But the M&A, I don't even think they love to do M&A. I just think they saw it as a really special opportunity. They could be like, I think the founder and CEO of Wix knew that the founder of Base 44 would want to be integrated in Wix, not only because of the synergies and the same everything I explained about the same culture and the same purpose and whatever, but also because they're both Israelis. Like they have offices in the same place in the US and in the same place in Israel. It's really smooth for them to work together. So I don't think it would even be wise to do more M&A. I think they should use the financial stability that they have to push forward with Base 44, which is what they're doing. As I said, they just sent like 50 employees of the marketing team of Wix to Base 44, which is like just a proof of how bullish they are. As I said, in 12 days after acquiring it, the CEO had already a plan for the next year with the Super Bowl ad included. So this was not an acquisition just for the sake of acquiring a company and trying to re-accelerate growth. They really thought that it was a perfect fit. So I personally would be mad if they just decided to start like doing acquisitions here, acquisitions there, just to have like a let's say, just to run away from the fears that the market have about the core business. I think if they decided to do it, it would be more like a concern rather than something I would be happy with.
I'm just looking at the stock, just the price action overall. This stock is extremely volatile on earnings, either having large sell-offs or massive pops on earnings. Is this at all part of your thesis in terms of adding, like how are you as an investor? Are you trying to play this to acquire as many shares before earnings?
Not necessarily. I think it depends on how the sentiment evolves in the next month. Generally speaking, not only about Wix, but we've been seeing every company report good earnings, and no matter how good they are, it can pop like 10-20% in the pre-market, but as soon as the market opens, they just dump to even lower than they were before. So I already have a 6 point. I can't even tell you my average cost. My average cost right now is 82.97. So I'm down like 16.5%. So I'm definitely lowering my average cost. But I don't have that much spare cash to be adding like aggressively, and I don't want to sacrifice my other holdings because I think it's a very asymmetric setup, but it has its risks and there are valid concerns. But I will most likely buy more before earnings, but I will not rush into thinking that it will gap up on earnings, because I think that it could very well gap up and during the session just go down. But again, it depends on the earnings up until that moment from other companies, other especially SaaS companies, because I'm not sure, for example, when Adobe or those companies report, or Salesforce, but I think Adobe is after, so not really a good sign. But Shopify, for example, they just crushed on earnings. They were up like, I'm not sure, like 15-20%, I don't know, but then they went down.
Yeah, you don't
And
have to remind me.
Shopify,
It's all good.
yeah,
I saw
Shopify
that.
trades at a premium, so I kind of understand, but they
I
crushed
saw
it.
that quarter, and I'm like, yeah, Tanner, all right. And then I'm like, oh man,
It was
There
a
was nothing,
26%. It was a 26% sell off from peak to trough. It was up
Yeah.
13 to down 13 and a half.
That's
I'm
wild.
looking at the chart right now. It's
Yeah,
crazy.
and that's actually
Candles.
one of the problems. That's one of the problems with Wix. Like and it's not like them specifically. Just this whole space is just a falling knife. Like it's not just Wix. No matter how good or bad a company is, I think there's some terrible ones that are probably destined to just die out. I don't think Wix is one of those with Base 44. And then at the same time, there's so many companies that have gotten sold off that are just amazing companies. It's like, how do you pick which one? Like you said, Manuel, you only have so much cash. So I think it's really interesting, and I'm going to be watching this very closely because I do think it's an opportunity, but it could also be an opportunity cost if there's something else out there that's also in the rubbish heap. And I think there's a lot of stuff in there right now. So it's a tough environment.
For what's so funny about Manuel is like I hate every single one of the companies that you buy, and then you make a fortune on them. I didn't get Rocket Lab, I didn't get Nebius, I didn't get Hims, and then now I'm just done questioning you. And
no,
like,
I mean, I think it's different here. I think it's different. Not that I'm not going to do a fortune. I hope so, but I think it's different in terms of the sentiment. I mean, and even the thesis itself, because it's as I said, it's quite a controversial one, and it's different from what I usually look for. But I think it has the potential to have that kind of return. But at the same time, as we were saying, it's vulnerable to how the market is looking at software stocks in general. And that's again why I haven't rushed into buying as many shares as I wanted to. If I just knew, like, if there wasn't like just the risk of it's going down just because it's going down and because everything is going down in the sector, I would probably have it like the double of what it is right now. But even when I wrote my first article, I even had like I hadn't bought a position yet. I was just like, oh my god, should I buy a software stock? These stocks are just going down every day. Like it's like buying a falling knife. Well, but at some point, I was just like, it can take some time, but I don't think it.
And another thing that I'm sort of thinking right now, just as sort of a more general view, is although Wix, could be very undervalued, when does sentiment turn around on the stock? If every single time that there's a model upgrade and we see Claude Opus 4.7, they know how to do a new tool or something like this, a new skill, and then there's a continuous, like, I actually don't know in some of these software names that we're not just going to feel this pain for 5 years, like, because there's going to be continuous model improvements, and I don't know why that's not going to get the market excited about what the future might hold for these companies. And I'm specifically meaning the Claudes, the Googles, all of these ones, as they show off, better website building tools and everything like this. Give it a prompt and it creates what have you. And now I don't even think that might even put real pressure on those companies, but the sentiment is there.
No, yeah, I definitely think about that. I was thinking about it like the last time, like last week or 2 weeks ago, when Claude released the new model, and the WIX went down like 5% in a few minutes, and like Base 44 instantly updated the platform with the new model, so users were quite happy, and I was like, oh god, when will this stop? I don't know. I don't have the answer, and I would love to.
Paul put in chat, Tanner, if you buy now, you'll make more than him if it runs. And I have to think about that.
That's true. That's true.
Especially if you do options, just like go for it. No, just kidding.
There's always a
I don't wanna
possibility.
yeah.
I know Davis did that for Robinhood. Whenever I bought at 16, it went down to 14. And he said, if I buy now, I'm going to make more than Tanner on this run up. And he never did. And boy, oh boy, did he regret it. So I'm going to think about this on WIX.
I mean, I'm down 16%. So, and I started to buy at 87. So I've been buying. The lowest I bought was like 78, because when they announced the buyback program, it started to go up, and I was like, oh, the tide is turning. Like,
it was like
I
the
got
day
the bottom.
Yeah, the timing of that was crazy. It was like the day after, or maybe the day of, where you like, hey, WIX is an interesting opportunity. I've been buying it for a little while, researching it, and then like the huge buyback, and then it was rocketing. I'm like, Manuel got another one, and then it tanked the other way. I'm like, okay.
No, but I'm happy that it wasn't like the bottom, because I want to buy more shares. But now I just don't know what will change this fucking sentiment, man. I was like, 2 Super Bowl ads, a $2 billion buyback in like 5 days or something, and I was like, what do we need?
So what do you think? Maybe we can answer this question.
Yeah, I was going to talk about this actually. I think it could be when base 44 becomes a larger portion of the revenue, because that will make like the growth really accelerate. Because if we look at, let me just check analyst estimates.
It's like Amazon's advertising revenue whenever it was doing $1 billion and no one cared, and now they're doing like 60 billion, and everyone's like, who didn't see it coming?
Just the margins.
People have been asking about base 44. So one question was, where do you think base 44 revenue is going to be in Q4? Like, what do they end the year with? And then what do you think it's going to be by? Sorry, there was another question here. What do you think it's
by the end of 2026? He said
by the end of 2026.
He said 200 million.
I think it will close 2025. It will close. No, it should have closed 2025 at over $50 million according to management.
Mm-hmm.
Yeah.
And they said that they include because this type of platforms right now has like a huge churn rate, because people are experimenting like across different types of platforms. It's normal, like huge levels of churn, and they consider those huge levels of churn on the ARR, which I think it's pretty honest, let's say. But I think I'm personally pointing to $200 million ARR by the end of 2026, and I don't think that's overly optimistic.
And that represents roughly 10% of their revenue, roughly.
Yeah, roughly. But then if you double that in the year after, it's 20%, and it's already doing some. And that's what I was going to look at. Like right now, we're at last quarter. September was 13-14% year-over-year growth. If you check analysts' estimates, they're pointing to a slightly acceleration in this Q4 to 14.6% year-over-year growth. But then they model a slight deceleration in like starting in 2026, and that's not going to happen. Like with base 44, we'll have like a significant, even if small in terms of the overall cake, it will be enough for at least to move a bit the growth rates, unless the core business really struggles. But I don't think that's possible, because more than 80% of customers have a yearly or multi-year plans. So that's why I also think the core business is, at least for the next couple of years, a stable cash cow, because most of the customers are really locked in multi-year deals, and part of this defensive posture was like offering 2-3 year deals to the existing customers at like favorable terms. So I think the catalyst that someone was asking is when analysts and the overall market starts to see the acceleration in the numbers. Like, but yeah, I mean, it can always happen that it doesn't show up. But I'm personally confident, let's say.
Yeah. Are there any other questions that we have for this?
Maybe. So there was nothing specific that happened in the last earnings that dropped it, right? Or because
No,
I know
general
it's
SaaS fell
volatile.
down.
Yeah.
And 5,300 employees, which
last earnings.
honestly, they should cut that in half.
Oh yeah. That's paid.
I'm not sure if. Let me see if they missed estimates, but I don't think so. I think they actually had a great quarter. But yeah, they went down like 20% or so, right? Yeah.
Are
But
you?
I remember reading that they had a good quarter.
It was a double beat. EPS beat by 60%. Revenue essentially flat, 0.5%.
Go ahead, Roy.
So, Manuel, like assuming nothing negative has changed in the macro of the business, that they have a fine report, is there a price at which WIX hits that you're just like, okay, this is stupid. I'm not going to DCA. I'm going to get my full position right now.
Oh, I'm not sure, man. I think it also depends on the rest of the market.
Yeah, fair.
Because I never invested in software stocks like before at all. Like no Palantir, no Shopify, no SaaS stocks, because I've always been like a focused on valuation mostly. Not putting valuation as my top priority, but putting a lot of weight there. And SaaS stocks always traded at a premium, so I never felt there was any really interesting opportunity. And I saw all of them going up, and I missed all those run-ups. Now I see that I didn't miss anything because they all are at levels like not seen in 20 years or something like that. But I'm still a bit skeptical of the general sentiment. So to me, it's feeling that urge to not do DCA and go all in, let's say. Not all in, but yeah, all the position I want. I think it's more of a sentiment change, a broad sentiment change, and not so much about WIX itself.
Fair, yeah. Thank you.
But it can always change. I'm not, as I said, this is not really like when I pitched you Navius guys. Like it's a different situation. I'm learning every day about the company. I like what I see. I think it's too cheap to ignore. That's why I thought it was too cheap to ignore in the 80s. I should have ignored it for a bit longer, but it's still like it's even cheaper now. We have the $2 billion buyback that we didn't have when I bought it, and overall everything points in the right direction. But I honestly don't know what to expect, even from earnings. Like, I think earnings will be good, but I don't think like it will be enough if the sentiment remains like this. So it's kind of a tricky situation, but at the same time, I didn't want to be out because it's been a while since I got so. I always say that the best opportunities and the most asymmetric opportunities come from when the market truly misunderstands a story.
Mm-hmm.
And it's been a while since I felt that the market was misunderstanding a story this much. I'm not sure if I'm being clear, but
yeah,
I think that's why I was so excited, and I didn't want to wait for a bottom. Let's say I bought it even though it was a falling knife. Also, it had like I'm checking the chart now, and when I was starting to buy, the RSI was at like 17. It was stupidly oversold, but then it went up because of the buyback and because of Super Bowl ads. So it's kind of slowed down the oversold thing, and boom, new cloud model. Let's go down again. So that made me, because if the stock had continued to go up, probably I would have more shares than I have right now. Like I would feel more comfortable. Like if SaaS stocks had like a relief trend and there were signs that the pain could be over, let's say, I could have bought even more in the 90s or even in the 100s, because that would be more of a general sign than for WIX itself. But I will definitely buy more shares. I'm not sure when. I'm not really in a rush, but I'll probably buy a bit more before earnings, but not rushing that much, because maybe we will see even better prices on earnings. But again, I will base myself on how I see other companies in the sector and even in general reacting to reports, because it's really crazy to see like so many good reports with like 10-20% dumps. It's a bit scary, like to say the least.
Unrelated, I was a little bit surprised. And I'm now a shareholder long-term of Nebius instead of just swing trading it, which I did before when you pitched it to us. I think all of us now are long. It got too attractive there. I was secretly hoping though, because I don't have a ton of Nebius. I have a little bit. I was like, come on, do what all the other stocks have done. Great report and just tank, and it didn't. So that could easily happen to WIX, but yeah, it's very interesting, and really sincerely thank you, Manuel, for not only pitching to us a stock like this, but also taking time, out of your day to, find some of these. We'll see if it's a gem or not over time, but yeah, this has been really interesting.
Appreciate it.
Manuel, can I ask you a non-WIX question before we go? Because we are all Nebius shareholders. Do you think that there is going to be a general push for larger companies to build on-prem again rather than in the cloud? Like buying their own GPUs, considering the orders are so freaking big these days and that they need to sign, multi 5-year plus contracts and everything, that they're just going to go directly to companies like NVIDIA and companies that are going to build those data centers for them?
It's a tricky question. I'm not sure if that's going to happen. I would lean more towards not happening. And I would say that even if companies want that, NVIDIA won't let them do it. NVIDIA wants these neoclouds to exist. That's why they back CoreWeave so much. I think NVIDIA and Jensen knows how they're stimulating the market, let's say. Some companies might do it, but it's kind of like, why bother? Because the savings for them wouldn't be that important. Are you talking about, like, let's say companies like Shopify or those big enterprises, or like, I don't think they will do it. I mean, I could be wrong, but it to me it feels like first these neoclouds and these like hyperscalers and wherever, they have priority in terms of buying GPUs. So if Shopify or whatever, those companies want access to the latest GPUs, they would have to wait a lot of time. And I think time to value here is very important. I think they would rather pay a bit more and have all the benefits like 1 year before. Like, for instance, if Shopify wanted Vera Rubins right now, they couldn't probably buy it. And they still would need like to build the data center or to build something to operate them. And I mean, it could happen, but if it does, I see it as just like a very long-term concern. Like when AI is already more spread across the globe, let's say.
Can I add just to that? Even though I've been in as a long-term shareholder the least amount of time, what shifted Nebius in my mind beyond valuation to interesting to absolutely compelling, and I needed to get in, was what we saw with the hyperscalers and also some other earnings where shareholders, and you can see it in terms of the price action, really pushed back against CapEx spend acceleration. And I think that there's enough companies and CEOs that see that and recognize that. And so long term, I think that's, that could definitely happen. Over the short term, and the short term, like meaning over the next 3 to 5 years, I don't think it's very likely, just because they've seen the shareholder revolt. Unless your company is like a Nebius, where like, hey, the CapEx is what's driving forward this business. Like you wouldn't be investing in that if you're anti-capex. It'd be silly. So I saw that as actually strengthening their moat a bit. So yeah.
Why do you think NVIDIA doesn't back other cloud names like Nebius?
I don't think Nebius wants NVIDIA to back them like they do with CoreWeave.
Why?
First, they're very, like, let's say, dilution sensitive in this way. They don't need to sell a stake to NVIDIA. Second, I think they don't want to have, like, NVIDIA having a large influence in their decisions, let's say. And I think NVIDIA is more focused on CoreWeave because they know CoreWeave needs them. And they know Nebius doesn't need them. This could be my biased take, of course. Because CoreWeave, if they, like the contract they signed with NVIDIA, like CoreWeave, NVIDIA buys every spare capacity that they have until 2030 or 2030, something like that. Why would NVIDIA do this? And why would NVIDIA, just like when CoreWeave was IPOing and it was being a complete failure and they weren't going to raise as much cash as they wanted to, why would be NVIDIA bailing out CoreWeave? First, because they're now on a scale that if CoreWeave fails, the AI infrastructure market will suffer. Even if the companies itself don't suffer, like it would be like a kind of what the drama that's happening with Oracle. Second, no, I'm already at third or fourth. But basically, I don't think, but this is just a guess. I mean, it's not based on any evidence of that other people don't have. I just think management likes to be Nebius. Management likes to be really independent, and they don't like this part of. I would think about it like last month or a few weeks ago. I thought when NVIDIA like invested the last $2 billion in CoreWeave or something like that, I thought about that, like it would actually be very nice if NVIDIA helped Nebius with the capex by investing like a couple of $1 billion in us. I thought about it.
They are going to be raising capital, right? Like they're not. They said something like 60% is going to be funded by.
Yeah, that's what
they're making.
But that's insane, man.
No. I'm a share, but what I'm saying is they're still going to need to raise
but
capital.
They won't
NVIDIA
need to raise that much capital. That's the thing. If you see CoreWeave, they have like, I'm not sure, but like $20 billion in debt, and debt at like 8-9% interest rates. Like some convertible, some not. It's really like not the best.
But the money that NVIDIA put up was like $2 billion, and they're most like like every
plus
public company, like
all the other money they had before. But yeah, I think the two main reasons, very simply, is first, Nebius probably doesn't want to do it, and this is my personal view. It's not like something they said. Maybe I'm completely wrong, and it doesn't make any sense. It's just something I feel from how I see management. And second, I think NVIDIA is doing this just to stimulate the market and to not let CoreWeave fail, because otherwise CoreWeave could be really in danger. Like, I mean, there's demand, but they really didn't have the best approach to grow. It paid off because they're now having like NVIDIA backing him. I would never bet against CoreWeave because just this contract with NVIDIA that they buy the spare capacity, I mean, just stupid. Like, if this contract exists, it's almost impossible for them to fail. But I think NVIDIA wanted them to like avoid saying, "Oh, we have some delays because of capital." Because the CoreWeave in the last earnings call they said that, and if they had a clause in the contract that if there are some delays, then some of the covenants of the debt change, and like there were some fears being raised about that. So I think it's more not really of NVIDIA believing more on CoreWeave than they believe in Nebius. I think it's more of CoreWeave needs us to bail them out, like not to bail them out, but to give them assurance that the all the depth and all the situation is not something that puts them in danger of stopping to exist, let's say. And Nebius not so much. But again, the part of Nebius not wanting them to own a sizable piece of the cake is just my personal view. But I wouldn't be mad if tomorrow Nvidia announces like a $2 billion stake in Nebius. Of course, I wouldn't be mad at all. I just think about it this way, let's say.
Yeah. Thanks. Okay.
Okay, maybe one last question and then we can call it. I do want to put up the other Manuel's question. How do you balance investing in exposure to asymmetric opportunities while doing risk management? And maybe I can just, shoehorn into that, Manuel, like what is the circumstances in which you would cut or abandon this thesis for WIX? Like, talk to me about that other side.
Abandon WIX, like get out of WIX?
Yeah. And like, so here, this user is asking, like, how do you basically balance risk management and asymmetric opportunities in terms of looking at your investments? And so I also want to know about, like, okay, well, if these two things happen or if these two things don't happen over this time period, then I'm probably going to look at other opportunities. Because we've seen you move in and out of names over the past couple of years.
Okay. So about this question, specifically from Pedro, I could say that my risk management isn't the best because I'm at a stage of life where I don't need to focus so much on risk management, even though how my portfolio evolved over the past couple of years required me to pay more attention to this, because like my portfolio today is worth 10 times what it was 2 years ago. So I'm transacting with values that I don't feel comfortable or as comfortable as I felt 2 years ago, like being concentrated in my 2 or 3 top opportunities, let's say. So what I've been doing and did mostly in 2025 was trying to look at still asymmetric opportunities, but in different sectors. For example, a stock that I could be pitching here, which is my third largest position, and I'm even considering concentrating more, is Arrow, which the ticker is HROW, which is, in my opinion, an asymmetric opportunity, but it's not the kind of asymmetric opportunity that, for instance, Nebius was, because Nebius was always a high risk, high reward opportunity. Even though I was pretty sure the thesis would work, and to me it didn't make any sense, the valuation and so on, it wouldn't be wise to call it like something different. And here I see Arrow, for example, as an asymmetric opportunity, but with a much more balanced risk, like much less downside. They are already like they have cash flows to support the valuation. The current valuation is completely, even though I see them, because I think, again, there are different types of asymmetric opportunities. So I try to diversify a bit without stopping to be concentrated, because I don't want to stop being concentrated, even if my portfolio grows. I mean, I can grow to millions of dollars, and I don't want to be holding like 30 stocks. It's just not how I like to invest. Maybe my view changes as I grow up, but I'm really young. So like if my portfolio goes to zero right now, I won't be starving. Like it's a completely different situation from many people. But obviously I don't look at my portfolio as like, it's okay going to zero. Like I would cry a river. Like obviously I have some risk management strategy. I'm just saying that I don't compromise on my strategy of looking for asymmetric opportunities. I'm just gradually moving towards trying to hold asymmetric opportunities that can always not be asymmetric opportunities, let's say, but in different sectors. And I used Arrow as an example. Why? Go check the charts, it didn't go down in this correction. It's a good example. It was like I put like 15% of my portfolio there, like over the past few months, and I could even go higher. I think it could double, triple from here, and the downside is minimal. But again, it's not a stock that suddenly Twitter will talk about and it will double in a week. It's more like a stock that I don't mind owning it and waiting for the thesis to play out. And I mean, this is generally the case for all of them, but it doesn't correlate so much with my other holdings. And that's the core of what I'm trying to do. Find other, for instance, WIX was also a bit in this context. I mean, it's not like it's a high beta stock. It goes down with the market, but it's not as correlated with Nebius or Rocket Lab as, for example, Rocket Lab is very correlated with Nebius because it's a FinX stock, let's say, and it kind of moves a lot with the sentiment with retail, and it's not an AI stock. It's not really the same sector, but they are correlated to some extent. And with WIX, I went to pick some SaaS side. With Arrow, I went to pick some biotech side. I have also some other healthcare plays. So in essence, I don't consider myself as a role model when it comes to risk management at all. And I don't think most people should follow the same strategy as I follow in that perspective, which is what I'm always saying to everyone in my articles. I always say, please, this is just a record of what I do. I'm young. Most people don't have the same tolerance I have. In April of last year, I faced a huge drawdown, for example, and I was like not happy with it, but fine. But yeah, basically, I'm just talking too much. But
Well, yeah.
going
And
to
likewise, that's
Sorry,
the
sorry.
thing that, like, if somebody's a newer investor, that you need to figure out your risk tolerance yourself. And the best
Exactly.
way to do that is how you're feeling during these big drawdowns. So Manuel, like for instance, he's mentioned many of his positions, Nebius and Rocket Lab and so forth. Those are not doing well year to date. And yet he, I'm sure, is sleeping like a
Nebius
baby.
actually is.
Well, yeah, Nebius is okay. Yeah, it's actually holding up decently well. Rocket Lab's like just it's tanking, and a lot of stocks that run up really far and really fast last year did the same. So, but like my point is, for you, you can sleep well at night. You know the quality of the companies that you're in. You have long term horizons. That's no big deal. Somebody else with the exact same positions would be freaking out every night and staring at their screen all the time and not able to sleep. And that's an indicator like, hey, this isn't the right strategy and risk tolerance for me. You need to know that yourself. And it can change too. Like Manuel said, like when your account gets bigger, if you have $1,000 in there and it's all in one company, it's super risky, you may be able to sleep, but you're going to think differently if you have $100,000 and that's your account and it's just in one high beta name. So yeah, just in drawdowns, use that as your tool to figure out what risk tolerance you're actually comfortable with. Because on the upswing, you're going to think, oh yeah, volatility, I can handle all of it. Maybe not when you have a lot of pain. So
Exactly. And April was good for me to understand that I needed to move towards a less aggressive strategy. Not only because I also thought that, I mean, we're not at the same stage of the bull market as we were like last year or whatever. So I think it's prudent not to stay as aggressive as I was like as I started to be in 2023 and 2024, because I really thought it was going to be a durable bull market. But yeah, that drawdown in April, like my portfolio was 5x what it was in the beginning of 2024, and suddenly in a month it went down by like 50% or something like that. And I was like, okay, I'm okay, because I like this is a macro event. It's not something that happened because of my companies. And I mean, we all have reasons. We all knew the reasons that were leading the market down, which were tariffs. So it's easier to hold down when we know the reason, let's say. But I thought to myself, okay, this is not the same as when you had the 50K portfolio. It's a bit harsh, or it's a lot worse to see like 100 or 200K going down, like disappearing in a month, compared to seeing like 20 or 30K. And then I also started to work and to get my money. I'm quite young, so when I started to invest, I didn't have any income. I had saved some income from like my side like as I told you, I started some online businesses as a kid, and I had saved some money, and that's how I was investing. So it's completely different from investing your hard work money, and like you need to see what's best for you. And I always say that I'm not the best person to talk about risk management, even though I'm gradually learning about it, and I don't want to. I always say I don't want to manage for volatility. I want to manage for maximizing my returns. But at some point, you got to find your right balance. So I think it's not something you should ask someone to draw your conclusions. Let's say about your question, Tevis. It was about what would take for me to leave WIX, right? I think it's hard because I think I haven't figured it out yet. But I think a good reason would be seeing like the core business really deteriorating more than I think it is, which I don't think it is like that much, or even for now, not even deteriorating at all. So I think if, and I hope they continue to report like both businesses as standalone. I don't think they would have any reasons not to do it. But for instance, if I see the core business suddenly slowing down from double digits to low digits like really rapidly, I mean, that would be a concern. Or if I see like free cash flow margins, they got it for mid, like at least mid 2020s. Like if I see base 44 as a much larger drag on margins, maybe I would reconsider as well. Or if base 44 isn't really growing at the pace I wanted to, like I'm pointing to $200 million in ARR by the end of this year. What if it stops at like 100 or 110? I need to reassess. I don't know. Probably from these three, the first reason about the core business showing warning signs or worse warning signs would be the most important one, probably, because I don't think base 44 is slowing down anytime soon based on similar web data. But that question about base 44 founder is a good one. I never thought about it to be honest, but I think it could make me think. But at this point, first I don't see him leaving because he gets more money. If like there are some like it was $80 million, but there are also add-ons if they reach certain milestones. We don't know for sure like what milestones are and how much would he get, but he's always asked what some people were asking, like, why did you sell your business if it had so much potential? And he's quite honest. Apart from what I said, that they needed a partner to survive, otherwise they would have to go the VC style that the founder hates, and wanted to get rid of that. He also said, I remain aligned. If base 44 wins, I get more cash. Like it's not like, I think he's kind of as aligned or even more than WIX management team in terms of getting rewarded. Because I think, for example, like the CEO of WIX owns like 1.5% of the company, something like that. I think he reached a stage where he's just like completed his life, let's say. At least that's how I feel from WIX founder. Like he posts a lot on X, like about AI and about life, and I feel like he's still passionate, but not with that driving that the founder of base 44 has. So I would rather, for example, I would rather see WIX CEO go away than base 44 founder. Let's see. But yeah, just to go straight to your question, I'm not sure yet what would be the trigger for me to sell it, but there are some warning signs that I wouldn't ignore yet.
Yeah, that makes sense. Okay, shall we wrap there unless you guys have any more questions?
No, I don't have any questions.
I I think this was really great. I think this was
I
super.
talked too much. Sorry, guys.
No. I mean, I think
No.
it's good. It's comprehensive. I think we answered most of the questions that people had. Yeah. So let me ask these guys just before we wrap. Is it? Are you guys buying? Like, where do you guys? And I'll answer it too.
It's a watch close for me. I'll have to look. I only have so much cash, and my cash position is quite low now. So if I think it's very interesting here. If it was the only thing that had fallen, I'd probably make it a position right now, but that's not the case we're in. So if it continues to sell off, Manuel, for your sake, I hope it doesn't. But I know you're looking long term, and it's fine. But for mine, oh man. We'll have to see, though. Like if something irrational happens, and I think it already is close to that point with the buyback and with what's happening in base 44. So we'll see.
I think for people, this is not a like. I even saw people asking me halfway through he was talking and saying, "Oh, Tanner, are you buying?" And I'm like, guys, I'm getting pitched on this as I haven't even heard all the facts yet. So. No, I'm not going to buy, but I think that this is a good signal to look into this company. So am I going to listen to the next or the previous earnings call and then listen to the earnings call coming up? Absolutely. And if there's an investor day or something like this that I can understand the business more, I mean, this should be your first impression.
An investor day.
Sorry?
I think there will be an investor day.
Perfect.
Not sure, but I think there will be.
This should be your introduction to this stock, not a permission to buy this stock. This is just, hey, put this on your watch list and listen to what comes next.
Mm-hmm.
And that's what you've done, and that's how I'm going to listen to, or that's what I'm doing with this information.
Yeah, absolutely.
Yeah. I think the same for me. I definitely want to wait until March 4 to see what their earnings are and what they say about base 44 and what they guide. I think one user really nailed it, saying because they're providing guidance on March 4th, they've got a good chunk of Q1 already done for. And so the yearly guidance is even more important because they're reporting late. And so that's one thing that I'm going to be keeping an eye out. But similar to Roy as well, like opportunistically, like if this falls even more, it's pretty cheap here, but I don't have a gun to my head, to buy it. But it's probably one of the more interesting ones that we've had on the show for sure.
And knowing the history of Stock Tank, it'll do well.
Yes, seriously.
Okay.
Cool. Let's wrap there. Thank you, everybody, for watching Stock Tank. Thank you, Manuel, for coming and presenting. I think this is your second or maybe third time presenting stuff on the show. We are trying to convince Roy to do a Stock Tank about air, and I think that's going to happen at some point in the next
couple weeks.
Air test
systems.
Air, yeah.
So,
I had to look at it when I saw Roy's thesis, and it was quite compelling. It was a few months ago, and I was like, it has some correlation with AI. So I had like almost half of my portfolio on Nebis. So I was like, okay, I'll just pass, but cheer for you. But it was quite interesting. I thought, like, because no one was talking about it, and I was like, this in the past it was quite like it had quite a rally, right? Like in 2020.
Oh, yeah.
Right?
My average I think is 17 or 18, and it's
a
good bit. It's a high beta stock under $1 billion market cap, so it's and it's been around. It's kind of unique because it's been around longer than I have on this earth. So, but because AI, basically, it's causing the entire business to not really pivot, but that what they've been building out and developing for years and years, where they're ahead, that's a real choke point. And we'll get into it more during the pitch. But yeah, AI has changed the thesis entirely. Otherwise, I wouldn't be in it.
I'll be definitely tuning in.
Yeah, something to watch for. All right. Thanks, everybody. We'll see you in the next one, and we'll let you know ahead of time when that is. Good night.